G'day folks, Jim here from FX Charts, Tuesday the 25th of March. Thanks for tuning in. Well, it was a pretty active session today, really involving the PMI data that was coming out throughout the session, starting off with China, which was weak. That pushed the Aussie in particular down to a low of under 90.50. Then we had some mixed numbers coming out of Europe. France was better than expected. Germany, for once, was lagging. That was lower than expected. That took although that took the euro up to 138.25, it ended up down at 137.75 before the US manufacturing PMI came out. That was soft as well, so that put the US dollar under some pressure and saw a pretty sharp rally in the euro and the majors against the dollar late in the US session. So we'll go and have a look at the charts. And as I say, this spike here, this is an hourly euro chart. The spike up was the French PMI number. And then we got the German release a little bit later. That took the euro right the way back down here to the rising trend support. And that held, and throughout the day there was it was chopping around, not really going anywhere too far. But as I say, the US PMI, manufacturing PMI, was weak, and as after the European close, the euro gained a bit of momentum, and stop losses then quickly drove it up. Once we broke back through 138, took it right up to 137.75 actually, where the 200-hour moving average did its work, and it's acting as some resistance at the moment. So there's a pretty swift drop back lower. There was some decent selling interest up there going late into the US session, and it's done nothing really since, going sideways at 138.40. For the coming day, well, the hourlies are looking slightly positive, and the 4 hours also looking reasonably big to me. So I suspect that on the day the dips to 138 are probably buying opportunities. If we saw it go through this 137.70 area, this low down here is 137.62, but the rising trend support's at 137.70. If we see it go through there, then we're probably headed for this low down here around 137.45. I don't think we're going there today. Below there would see 137.20, which is the pivot of the whole mover. On the top side, if we can take out this 138.75 level, then the top, this descending trend line here is at 130, around about 139, 138.90. Now, if we get above there, then I guess we're probably headed back to 139.66, which was the high. And beyond that, 140. And I don't think we're going there today. There is a fair bit of activity out later on, headed by the German IFO. But I think all up today, I prefer to buy dips, but I'd be surprised to see it too much above 139, unless the IFO comes out particularly strongly. We've also got some US data out later in the day. We've got the Case-Shiller housing price index. We've got the US consumer confidence and new home sales. There's also a G7 meeting discussing what to do with Russia, and Mario Draghi will be speaking. So it could be a fairly active session. And as I say, I'm a bit doubtful of breaking 139, but if we do, we could see a bit of a squeeze hard towards the recent high. And on the downside, as I say, I think dips at the moment to 138 look like a buying opportunity with a stop loss under 137.75. Moving along to dollar yen, there's not really much to say. It's chopping sideways. It did actually make a new high yesterday, 102.64, but that didn't last very long, and we're now back down here at this 102.25 level. We've got some support here just above so 102, 102.10, 102 the figure at their 100 and 200 day moving average. I don't think we're going below there. But if we do, we might go down to 101.75, somewhere around there. I'm a bit doubtful of it heading down there, really, and I wouldn't be surprised to see another 102 to 102.50 range trade. The indicators aren't really showing us an awful lot. The 4 hourlies slightly negative, so we might see a little bit of a push lower, but I don't think we're going to see anything dramatic, really. The action looks to be elsewhere in Europe and sterling, and also in the Aussie in particular. So that's really dollar yen. As I say, I'd use 102 to 102.50. Stop loss I would have below 101.75. Cable, well, that had a pretty choppy session, but it did pretty much as we kind of expected it. It went down to this 164.70 area. Actually, the low was 164.62, but it held the 61.8% support realistically on this move up. And as the US dollar weakened late in the session, sterling actually rallied up to a high of 165.35, where it ran into some opposition from the 100-hour moving average. Came back down pretty sharply, and it's sitting really where it closed the previous day, around 165, the figure. Now, there's not an awful lot looking to me like it's going to happen. Certainly, the 4 hours are slightly positive, perhaps, and if we do see the euro climb later in the day, then sterling might have a rise of its own. We've got the CPI data, the UK CPI data comes out in London. So depending on which way that goes, that's going to be the main driver for cable. But it looks slightly positive. If we can take out 165.35, we might head back up here to sort of this 165.65 area. And I don't really think we're going much above this descending trend resistance at 166 today, though. And as I say, on the downside, I'd be a buyer again at 164.70, but stops pretty tight underneath there, probably just below 167.5. Sorry, 164.5. Dollar Swiss. Well, that had a choppy day as well. The PMI data caused a spike lower and then a rally. But late in the day, when the US dollar weakened, as you can see, it actually came down quite sharply, probably more so than I would have considered. I would have thought it would have stopped around 88, the figure. It didn't. It went down to 87.85 before bouncing, and it's sitting just above the figure again now. But the hourly charts are looking a little bit negative. So we could, if we can take out today's low, we could head down towards this 200-hour moving average, the rising trend support at around 87.70. I'd be a buy again down there, but I'd have a pretty tight stop, I think, under this sort of 61.8 area, around well below 87.60, probably below 87.50 a stop should be. The 4 hourlies, they are actually looking as though we might actually see a bit more downside pressure. So maybe the buy at 87.70 or below there may be a little bit too early. We could see a break of the a test of the stops below here. But having said that, the dailies are positive. So while the 4 hourlies are looking a bit negative, and we could get a test of this down here, somewhere around here, I do want to be a buyer. Maybe 87.70 with a stop at 87.50 is too early, but given how steeply these are looking. But with the dailies pointing higher, somewhere around here, I think we're probably putting in a bit of a base for a return up towards the rising trend line, which currently is around 89.35. Now that's a long way away yet. We really need to get above this 88.70 level, which is currently holding us up. The Aussie saw plenty of action today. We got this dip down to 90, just under 90.50 here on the release of the Chinese PMI. Since then, it's really been one-way traffic, and it accelerated, taking out some important levels. That 90.38 level that we spoke about yesterday, it's taken that. It got up to 90.49 today. Now, if we go to the 4 hourly charts, we can see it's made a new high. These two highs here have just about been taken out, although the Aussie's now back below there. It's at 90.25. And if we look at the dailies, as we can see, the head and shoulder formation is beginning to look as though it is a possibility. But until we take out this 90.50, I wouldn't get overly excited, I don't think. The market's generally watching this fairly closely now. Trading's been pretty difficult recently, so the market is watching it. So everyone's got the same position, I would suspect. But we really need to close above a daily close above the trend line here and the 200-day moving average. So if we can get above this sort of 90.50, the next port of call is 91.67. That's around here. This is back the sort of November, December high. Now, if we get above there, then we're off to the races, I think. And there's not an awful lot to stop it between 92, 92.5. And the first FIBO resistance is not until 93.90. So it's worth watching. The dailies are not really suggesting that we're going to do anything in particular. Now, what worries me is that a lot of people have got this position on board, And if we do get some poor numbers out from the Aussie, or for China, come to that later, the Aussie could move quite sharply lower. So I think keep stops pretty tight at the moment. I'd certainly have a stop loss probably around 90.70, or for those who are feeling a bit more gung-ho, probably below yesterday's 90.46 low. Because below there we could get this is the 200-day move, 100-day moving average is back here around here at 90.10, and below there we've got this 89.50 rising trend line, and we could see that if we broke that, then I think the Aussie's in for quite a steep decline. But at the moment things are looking all right for the Aussie, and it could be that a break of 90.5 does see us climb quite sharply higher. One thing to note is that both the Assistant Governor Lowe and the RBA Governor Glenn Stevens will be talking later on today, and they won't be talking the Aussie up. So just be a little bit careful about being long in front of what they have to say. The Kiwi, actually, while I'm on the Aussie, just moving along to sterling Aussie here. Now, as I pointed out yesterday, we had a fantastic rally up to 182.15 yesterday, allowing us to get short just ahead of the neckline here. Now, I think this potential move, the neckline's broken. The objective's down around 171, 172. So there's we've got 9 or 10 big figures potentially in it. Once again, there's a lot of people now looking at this. I would keep stops pretty tight. Well, depending where you're short, but stops realistically should be above the neckline at 183, and if we get above there, then I think sterling could go quite a lot higher. But until then, I like the idea still of selling rallies towards the 100-day moving average here. That's just under 183. So selling it at 182 with a 183 stop loss. 182 is now looking a bit of a way away. 181 and 181.5 could well be about it. The indicators, the daily indicators, are pointing lower. And the weeklies also, more importantly, are pointing lower. So I think the momentum really is for the downside, more so than the reverse head and shoulders in the Aussie against the US dollar. So I kind of like this move, and I think there's potentially a good, as I say, 9 or 10 big figures in it. So now moving forward to the Kiwi, and there really isn't too much to add. 85.65, it remains the resistance. There's a bit of a double top up there in the short term. If we take out 85.65, then I guess we are headed back to 86, the figure. In the meantime, if we go and look at the 4-hour charts, we're sitting on a decent trend support here. That's around 85.30. A break of that will take us back down to about 85, the figure. And if we were to go below there, then I'd get a bit worried about a move, an accelerated move down to the downside, so 84.30 or so. But while this holds, I think the Kiwi looks all right, particularly if the Aussie does move higher. It'll take the Kiwi with it. So I think the idea is to stay long, probably with and you can probably even buy a break of the this trend line as long as 85 the figure holds. I'd have a stop loss under 84.70 though. 85.65, as I say, I think in the short term will be it. But if wrong there, we could see a move back up to this high, 86.05. And eventually up to 86.40, but I think that's still some way off. Now, finally, we'll have a look at the dollar index, and once again, that's having rallied sharply the other day. It's lost a lot of that ground since, and it's come back to sit right on this rising trend support here, around just under 80. The figure it's currently at 79.93. So it's really trying to make up its mind which way to go. Now, the daily indicators are suggesting that we are going to see another move higher, which makes me a little bit dubious about the strength in the euro and the weakness in the dollar. But if this indicator turns lower, then we are going to see further dollar weakness, and the euro will head higher. The 80.44 is before we get there, we've got to get over last week's high, so around 80.35. 80.44 on this descending trend line is major resistance, and above there we go to this high here, the February high at 80.55, I think that was, and then beyond that we're moving up towards this 100-day moving average, but that's a long way off at 80.90. On the downside, if we do head lower, then this 79.26 was last week's low. And then we've got this major support coming here at 79, figure 10. I don't think we're going below that. So it could end up just being a choppy session, but there's a lot out later on today, as I say. We've got a whole mix of US data, German IFO, Draghi speaking, and we've also got the G7 meeting discussing Russia. So there's plenty of room for manoeuvre. And elsewhere, as I say, we've got the UK CPI, and both Lowe and Stevens will be speaking on behalf of the RBA. So it could be a pretty mixed session all up. I kind of like buying the Aussie still, but I think you need to be wary and keep stops, as I say, at 90.70. And sterling Aussie, that's the other trade that looks reasonably clear to me at the moment. But that's about it for today, so have a very good one, and we'll talk to you tomorrow. Cheers. One last thing on the Aussie. I just noticed that when I was talking about the Aussie breaking higher above this level here, I mentioned the level of 90.50 on a couple of occasions. That, of course, should be 91.50. Apologise for that. It's too much movement going on. Can't keep up with it. But 91.50 is the break line, and that will take us back to this 91.67. And then above there, as I say, we're heading on towards 92, 92.5, and possibly higher. Stops should be kept at around 90.70. That's all then. Have a very good one, and talk to you tomorrow. Cheers.